Hey, Jamie, Steve. How was
Hey,
Monday?
what's up there? Thank you very much, Scott. Steve, what's shaking in your neck of the woods, sir?
Not a whole lot, just another Monday.
About as much as shaking in my neck of the woods. Indeed, and what a Monday it was. And we'll get to that here in just a little bit, but welcome everyone. Today is September 21st. This is the office hours. I'm Jamie Hodge. Got my sidekick Steve Gomez in here as well. So let's go ahead and get started. Just want to buzz through the disclaimer real quick here. Just want to make sure everyone in attendance is aware of the fact that all the info that we share with you guys, whether it's this webinar or any of the other webinars coming at you on a weekly basis, it's for educational purposes. In other words, somebody that's legally licensed, investment advice, all that good stuff. Once again, everything we share is for educational purposes only. And moving right along here, just like to take a little bit of time in the Trade Ideas Trading Room hosted by Barry. Quite pricey, but that is one of the benefits that you get when you're part of the TI community, is a trading room stacked with knowledgeable people, and there's no charge to get in there. Of course, you get myself and Steve on Mondays with office hours. Steve's going to take the steering wheel tomorrow. Tuesdays for Trade of the Week. Andy Linloff is going to rise up just a little bit on Wednesdays, bring in our CEO and founder, Dan Merkin, along with our Chief Technical Officer, Brad Williams, always interested each and every day. And that is a great hour allocated to where you can go in there and get live help on anything TI related. Doesn't matter if it's simple config, anything on the table. So this next slide right here will show you how to get there. And you can bookmark this address down here, tradeideas.com/live. Once you bookmark it, it's just really easy to pop over there. And our subscriber growth is steady growth. Of course, there is a direct correlation between us launching our AI modules and some nice subscriber growth, but 2020 clearly far and above the prior 2-3 years there, and it's an interesting year thus far and should be an interesting finish. And as our subscriber base increases, so do all of the orders that are going through Brokerage Plus, both in demo mode and live orders filled. Of course, Brokerage Plus is our module that lets you trade using our software, assuming you have an account at Interactive Brokers. And as you can see here, not only for a while now, but I think we're getting pretty close to porting Brokerage Plus to yet another broker dealer, since Interactive Brokers is currently the only one and has been that way for quite some time that you can use to trade with. Hopefully we're going to have a $0 broker dealer coming online, hopefully sooner than later. Word on the street or word out of the development department is it's looking more like Ameritrade might be the first one to be finished. But it's always been a toss-up between E-Trade and Ameritrade, but from what I hear, I think Ameritrade development has the lead right now. So we'll just have to keep our fingers crossed and see what happens coming down the pipeline, hopefully relatively.
Watch the sandbox.
Yes, watch the sandbox, the developer sandbox. All right, so yeah, that will be exciting when we do get a $0 broker dealer, because hey, when you don't have to pay commission anymore, well, that kind of makes a big difference. All right, here we are on today's agenda. So we'll just dive right in here in just a moment. Gonna let Steve take the reins here and talk about the overall action of the market. And boy, you know, a little red day was not off the table coming into the session today, Steve, but man, it was a pretty decent gap down, wouldn't you say?
Well, especially if you were in silver.
Yes, the metals, silver, gold.
We'll get to that. I mean, that was my day.
All right,
Looks
well,
like
let me kick it over to you real quick, and then we'll
it looks like the people are voting TD Ameritrade is already, like, everybody's screaming for TD informal. So S&PY, the SPYs, also known as the S&P 500, let's just play the time machine game. Okay, so we were around here, 10 coming down over. It's probably going to have something, the 50-day moving average, respective with the 50. Like on a shelf here, it was just so defined. I mean, look how defined it was. And, you know, it's not a good thing, but it's also nice land, and put in a nice candle, and especially also for people is a must have both things together, the candle and. So for that, and our next level is to say, all right, well, where closing of today's candle there, the level that's right into play. So we're starting. If we move this line down to the low of the day, it's again resistance, all of it will trend. Maybe this trend line, is for the most part intact. And when you call it a bottoming tail, you usually want to have a reason for that bottoming, either the body of the candle hanging above the moving average or like this pretty darn soon. And so getting ahead of myself, pressure bounces up into the underneath side of the moving average. We'll call that the pocket. It's all going to come down left of price action. Let's see by Friday if we can start posting some. Have to respect these. Probably a touch right. So, we'll see what happens. Lost it. I'm not happy about that, but a beautiful bottom markets can correct really quickly, and before you know it, in case of hiccups, not really going to.
Good stuff, and we shall see. So let me grab it back from here. And right along here. Okay, also too, a little bit of downside might be, and typically I don't really pay a lot of credence unless it's over 62%. So well above 55%. When I saw the stocks that were hitting lows versus highs in the opening 15 minutes with that accelerated volume over here on the left per trade based on the stop versus the Holly trades. And typically what I like to up here from today's market, getting through it just a hair of sentiment here. And then we have this little break here. So Holly today, we bounce back up running Holly in auto mode today. I typically do this each and every day just to kind of get a feel of running. So 115 on really that adder stocks that was in the market today. But the AI saw was just there stepping up all day, and the volume was pretty decent in it right here. So relative volume finishing the day at 12 trading. That's what's right. George, I see your question there. Let me creating the spread or the slippage. Okay, George, real quick here. When we're talking about AI and slippage, let me just pull this over here real quick, and we'll do a little bit of exploration here. So let's check out Cub first. And when I'm talking about slippage, the AI is always going to mark the price at the exact time that the print from the time of the sales went off. When the alert within the strategy fired, of course, all the filters have to be met. Then one of the stocks meeting that filter criteria has to obviously exhibit the alert or the action item for that strategy. So with Cub here, we can see the AI marked its price 55.57. But if we look down here at my brokerage plus, my fill was 55.63. So that is 6 cents of slippage just on the Cub trade. Okay, so that's what we're talking about when we're talking about slippage. The difference between the price that the AI marked versus the price that you got filled at, whether that's manual or automation, it's still the same thing. Typically, if you're hitting the trades manually, sometimes you're going to take more slippage than you would if you're hitting the trades auto, or sometimes if the stock pulls back, you actually have the opportunity to get a better price than the AI, but that's more from a manual input perspective. Let's do another one here, CNC. Entry price of 55.84, but keep in mind that is a short, so a less price is slippage on the downside. So we'd rather be short at a higher price. The AI marks 55.84. By the time we got the short off, the price was already down to 55.80. So that would be 4 cents in CNC. Okay, so we've already got 6 cents here, 4 cents here. So that's 10 cents of slippage. Here at one more before we move on. ICAD, let's see here, was also a short trade. 8.90 was the price, and look down here, 9 cents of slippage on mine because the stock had moved down 9 cents before I got this fill of 8.81. Okay, so for 10 cents and 9 cents, that's already 19 cents of slippage just on the 3 trades there. Okay, so hopefully that helps illuminate the slippage issue, George. And of course, spread of the stock is always going to have an impact on that as well. So price that the AI marked, and then also dependent, are we using market orders? Are we using limit orders? A lot of things come into factor there. And then of course, if you get rejected on a short sell, there's just not a whole lot anybody can do about that. Okay, so get this push back over here. Hit the right button there, Jamie. That'd be a good thing. All right, so now we're going to go back to just some of the good old bread and butter setups that are there each and every day, even in a market condition as we had today. There's still going to be some decent opening range breaks, not only to the short side, but there's always going to be a few stocks that are bucking the trend, going up in a down market and vice versa. So all the plays that we're about to look at today are going to be exhibiting some decent opening range break patterns, and they're going to be generated from these two windows that you see right here, which I will happily share at the end of the webinar, so that anybody who wants to try them out can easily do so. So let's just go ahead and do the short side first. And first on the block here was CTRA, and here we have it. Once again, the new T low is the one that produced this one. So CTRA, a little gap down here. Little gap down as we can see. Then for the first 5, 10, 15, 20 minutes, buyers took it up. Saw this in a lot of stocks today. But then before too long, gravity took over. And we come back down to this level right here where the wick is marked off, and we peck through it right here on this little wick through right here, as you can see from the blue arrow. So a price approximately right here at 7.61. And typically to assess risk on these things, what we're going to do is look at the candle prior to the entry candle, the little green hammer type candle right here being the entry candle. The top of this candle right here would be the risk. There we can see our risk. And before it was all said and done, we had a low in that stock of $7.10. So once again, 762 down to 710 for a nice 50-something move on a $7 stock. Not too shabby. It's all about the risk and the reward here. And as you can see from the risk area, we could probably pack that into the reward area about 3 times there. So risk and reward matched up on this one. Of course, didn't stay down there too long. All right, not a lot of follow through. Once these things bottomed out, a lot of them retraced, if not all the move, but sometimes all the move, sometimes most of the move. But nonetheless, if you didn't act quickly, and I say that, but you had plenty of time to make a decision to get out of this thing. What you're seeing right here is the 10-period fast line. Typically, I'm showing the 15-minute charts, but as you can see, 5-minute time frame kind of adhering well. As soon as we started getting the closes above, that's when the things started regressing back up. So plenty of time to make your exit decision as this 10 period was being tested right here. So CTRA, not too shabby. Next on the list, we had GRBK. Just like everything else, a little bit of a gap down up here to start the show. No upward bias on this one to start. Sellers in control. Then we get about 5, 10, 15, 20 minutes here. So 1, 2, 3, 4, 5, 6, about a 30-minute opening range break, kicking it off right here. Risk is up here. Once we make the entry, get a little ebb and flow around the line, throws us a little bit of a wiggle about halfway through the stop area before capitulating down over the next 30 minutes or so, stabling out a little bit longer and eventually bottoming out around the 1582 area from an entry point of 1676. So once again, risk area right up here, and we could probably fit that risk area into the reward area about a little over 2 times there. All right, just watching the questions here. Looks like you're caught up. Okay. All right, so CTRA, GRBK. This little guy put in a decent move as well. NTN, this one, gapping up, taking a little run up before sellers take control. Coming back down here and then putting in 5, 10, 15, 20 minutes worth of consolidation, which is a good sign. I mean, this is what we're looking for right here. It's been there in each and every one of these patterns that we've looked at thus far. That's telling us that, we could just call it a simple consolidation. What's it really telling us? Hey, buyers and sellers are equal for this period of time. What's going to happen when we get out of this range? Well, exactly this. Break the level right here, right about the $2.15 level, hovering around the entry level. Kind of reminds me of a Holly play, all right? If Holly was in this trade, she probably would have closed it out in a reduced risk format. Anywhere near our stop level, want to stick with our hard stop. That's what we're for. That's what it's for. If we're wrong, we're gonna bail on it. But before this thing capitulated down, 215 was the entry and bottomed out right about $1.83. So a smaller price stock, but a very decent percentage move. Nonetheless, we could probably pack this risk area at least 3 times, a little bit left over here. So as far as risk to reward went today on the short side, NTN fit the mold there. And once again, even though we're looking at the 5-minute, the 10 period seems to be in control on the 5-minute charts as well. All right, there was one other one. If Sean McLaughlin were here, he'd probably kill me for pointing it out. But you know what? It's the pattern that matters. So we're still going to look at Torch here. Okay, TRCH, Torchlight Energy Resources. It is a very low price security, but once again, it's all about the percentage move. All right. Once again, what do we have? A gap up, a move up, back down here, kind of breaking this level. It's all about the percentage basis. You know, 10% would be 3 cents. So between this level and this level, we got a whopping 5 cents out of TRCH. The only factor in this trade would have been, is it even borrowable? Can you short it? I know what a lot of the proprietary firms, sure you can. When it comes to big retail places like IB and Ameritrade and E-Trade, maybe, maybe not. One thing I have noticed, you know, we've done a lot of, we're trying to get going with Tasty Trade, and every time I pull up any stock, it seems like on Tasty Trade, especially the low dollar ones, it'll say hard to borrow, but I have yet to be rejected on any of the short sales over there at Tasty Trade. They've got a pretty extensive short list, which is great, especially when the time does come that we, heaven forbid, go into a bear market. That short list is going to become a lot more important, obviously, when short selling is a lot more prevalent than going long. All right, so that takes care of the short side, I should say. But even in a market such as we had today, we're going to have a couple of stocks that are bucking the trend and, you know, following the volume, even on a day like today where most every stock out there was doing a little bit above or a lot above average volume. But when we're looking at these windows, just to refresh everybody's memory, and the setting is the same in both the long and the short side, we are requesting relative volume of a 4 minimum. Okay. Now, you know, that means something. So first one out of the long hopper today was Little Sol, S-O-L. And here we are looking at the 5-minute intraday once again. Opened up, came down here, put in a low, and then before too long, we're up here pecking at this high and got a pretty good move from 260 all the way up to 290, which once again, on a percentage basis, is not too shabby. Could probably put this risk area at least 2 times in there and maybe have a little bit left over, but not a whole lot of pain in this trade. If you were able to grab it, you know, at least I'd say I wouldn't want to chase it more than a third of the way through that big green candle there. And even if you missed that, probably gave you a little bit more time as it put in these smaller candles here. But nonetheless, a nice clean range break and a nice percentage move in SOL. Yeah, Jim, this was not from the AI trades. This was from this window right here. The short trades were from this one that we just went over, and SOL was produced by this window here. You're correct, it was not an AI trade. We had another good move in ACRX today, okay? This one started off nice and tight, about 30 minutes in, 1, 2, 3, 4, 5, actually about 25 minutes into the open, putting in these nice little 5-minute candles here. The first break right here, of course, depending on who you are, that might have been a little early. You know, a lot of people don't like to start for 15 minutes, 30 minutes. If you're a 30-minute person, this one was a little soon, coming at 25 minutes in. But no worries, because if you miss this level right here, and we got this nice clean move up, put in a high right here, you had one more opportunity right here with a nice clean break above this level, which would have put you in line for the majority of the move today. But in all actuality, two nice entries in ACRX today as it was just crushing volume pretty much all day. Finished with a 15.54, kicking out almost 16 million shares when it normally does about 1 million shares a day. All right. Oh no, look at the industry that's in, pharmaceuticals. Okay, and of course I don't expect the pharmaceutical bonanza to stop, either to the upside or the downside, because of, well, all the stuff that's going on out there right now. I'm not even going to mention the thing because I'm sick of hearing about it, but you know what I'm talking about. Pharmaceuticals, biotech, they're going to be in play for the unforeseeable future, so keep that in mind. But a very nice move in the ACRX today. But as I was saying earlier, if you didn't take the cookies, whether it was a long or a short, we just seem to be giving everything back. You know, stock makes a nice long run today, it's going to come back down. Made a nice short run, it's going to bounce back up. So it will be very interesting tomorrow to see if Turnaround Tuesday is in the cards. So that's about all.
Joshua's question there, that the only thing you can do to cut a size in half on a good gain is going to be a discretionary thing on your end. There's nothing automated that can be done for a half exit.
Right, and I'm just soaking up the question there. Yeah, we hope to have some more advanced profit taking and exit criteria coming down the pipeline. But yeah, right now it's more or less you working with the machine, and of course, you know, the gray box, right? The entries are, you know, the part where you can save a lot of time. The exits are sometimes the things that we can do better on, which is why, you know, typically on a different type of day, when we're seeing the AI make its conservative exits, a lot of the times they can actually be very decent entry signals. But yeah, just good old fashioned trade management, peeling some off, giving some a little bit more room based on your individual risk parameters there, Joshua. Okay, so let's check a little time here. We got 15 more minutes, should be just enough time to talk about a little top list. What I've done is I've prepared a relatively simple top list, just kind of the 200-day hey, but you could call it whatever you like here, because one of two things are going to happen. Well, I can't say one of two things. Either we get the turnaround Tuesday tomorrow on the SPY, or if we get more softness in the market and we break today's low, well, you know, look what's just kind of calling like a siren down here. Not saying that we're going to go test that 200-day, but man, it sure is there, right? So we either have turnaround Tuesday tomorrow and get back up into this level. We break today's lows. Well, you know, looking back down to this area over here. And if that happens, well, then that 200-day, it might happen. All right. Now, it might happen and it might not, but there are some stocks out there that I think are, you know, either leading the charge or they're getting ahead of themselves. Don't really know which one it is, but putting in some interesting action around the 200-day average. So what I've done here is I've prepared a top list, and if we take a peek at the configuration, it's relatively simple. Market cap has to be $1 billion, so I got 9 zeros in there. And we're just gonna have zeroing in on the 200-day moving average. So it can't be more than 0.3% below. It can't be more than 0.5% above. So we should find some pretty interesting things that are happening right here at the 200-day average. And then I've just got some very generic volume requirements in there on the 5-day, 500,000 shares. Just kind of pick that at random. So once I drop this into the chat panel for you guys to grab, just keep in mind, we're seeing a decent amount of stocks on here, but you can always increase the amount of hits or decrease the amount of hits by tightening or loosening some of those key filter settings in there. So let's just start taking a peek at some of these, and I've got this window sorted by change in the 200-day over here. If we wanted to find stocks that are right at the 200-day, like cold, well, we'd focus in on the zero values over here. So here we are looking at cold, coming down, putting in more or less a doji today, right at that 200 period moving average. And if we zoom back out a little bit, we can see the area that is acting as potential support, okay? Was acting as potential as resistance a while back. Now it could be acting as potential support, but we have the added benefit of a doji candle right at the 200 day, all right? So, you know, once again, not saying to jump into these blindly, but take a look at the candlestick formations today, tomorrow, depending on what happens tomorrow, and then base, you know, whether or not you think it might be good for a swing trade, intraday trade, based on the candle formation and, you know, the area that it's butting up against when we look to the left. So all in all, gold not looking too bad here. Get some of the other ones. Iridium, okay. Nice little 2 days of selling. Here we are, butting right up to the 200-day moving average. And so 200-day average is the first thing. And then how the candle closed today. You know, is it a doji? Are we butting up? You know, what happened today at the low? Looking at this level right here, seemed that it acted as a perfect AEE, and not liking that one as much. Looks like, you know, looks like a close slightly below the 200 period. Johnson & Johnson, everybody knows who these guys are. A lot of the times in a weak market, these defensive stocks, Johnson & Johnson, Unilever, you know, the companies that make everything that you need, from soap to cleaning products. A lot of the times people consider these defensive type plays when the market gets soft. So all in all, this list should produce some very interesting candles, closing on the daily right at that 200 period moving average. And then if you can also line these up with some areas of potential support, I think this list could give you some pretty good swing trade candidates. I'm not saying you can't use it for intraday as well, but simple, effective, and should point us to some interesting plays. You know, Steve, I forget what trade Michael made today, and I pulled it up. I was like, oh yeah, right there at the 200 period moving average and a little descending wedge with some nice support.
I don't recall.
Yeah, so, you know, bottom line is, to make a cake, you don't need very many ingredients, all right? So the 200-day with the candle formation and then areas of potential support, those are your 3 ingredients. All you have to do is scan through the list, see which ones appeal to you, and then you know what to do after that. So I'm gonna go ahead and drop this list into the chat area. All right, so there we have the top list. And for those of you who would like to watch the high volume windows for the range breaks, I'm gonna go ahead and dump those in too. So you'll have 3 cloud links in there. First one is the top list. The last 2 are the high volume momentum tickers, looking for those range breaks. All right, so I believe they're all 3 present in the chat window. Describe those cloud links, and you know, like I said, simple, 3 things to look at: proximity to the 200-day moving average, how's the daily candle closing, and did that candle, you know, did it have a wick down to an area of potential support? 3 simple things to look at, and hopefully you guys will find some good entries off of that. So
it just occurred to me, you and I didn't really, you know, exchange notes today, but that's kind of what I was talking about on the market recap, huh?
Yep, exactly.
Mm-hmm.
Yep. So moving averages, not the end all be all, but hey, that's all we got, you know, other than looking at the actual areas of the candles. But yeah, anything to add, Steve, before I kick it on over to Scott?
Nope, that's enough for me.
All right, ladies and gents, thanks for attending. Scott, if you're ready to let everybody know how they can save a little moolah on a new sub or an upgrade, we're ready for you.
Thanks, Jeremy. Sounds good. Yeah, on the way out, a couple items to remind everyone of that. We do have a good ebook about earnings. It's all about how to take advantage of earnings season. One of our newer ebooks. Just go to trade-ideas.com/earnings to get it. It's also has some cloud links that you can import into your layouts from the scams that are being talked about in the book. Subscribe to the podcast so you can get the next one when it comes out. search for Trade Ideas Podcast wherever you listen to your favorite podcast apps, and check out the interviews we published earlier this year. They're really good. There's a new code, all savings, all caps. Just go to trade-ideas.com/price and plug that in when you check out. Or if you decide you want to do an upgrade from standard to premium, go ahead and use that code too and save the same percentage. You can find Jamie on Twitter at QuantPod. You can find Steve at Today Trader. Facebook.com/TradeIdeasPro is the Facebook page to like. Share everything we post with your friends. And any questions at all, email us, info@trade-ideas.com. Goes into the help desk software so it doesn't get lost, and you get the answer you need. We're going to have the recording of this session up later on tonight or tomorrow, so keep an eye out tomorrow or an email from GoToWebinar with a link to the playlist. Thanks, Jamie. Thank you, Steve. Have a good one.
Thanks, Scott. Thanks, everybody, for popping in. Thank you very much, Steve, and we'll see you guys tomorrow.